Hi, this is another video from Rocket Man, and I want to focus here on when to exit stock. They say this is the $1 million question. Well, it's not so $1 million if you have a strategy, right? It should be built in your strategy or to exit. You don't exit on a whim. Um, and since I am a fundamental and technical investor, I use fundamentals to exit the stock market and technicals. I use both of them and not just gut feeling. I'm going to use a company called Hershey. It's a chocolate company to show when I would exit a stock. And this is a video for myself as well. So we can see here that Hershey, Hershey was making higher highs and higher lows. Right? You can see higher highs and higher lows along the way. Right, I'll just do this here, put it in there. Hershey's making higher highs and higher lows. There we go, right here. Should have up. There we go. It's making higher highs and higher lows. Right. Good. So that's clear. Right. Higher highs and higher lows. It's basic. And we can see that it's above the Ikamoku cloud. So it's bullish. And finally became bearish. We have a stage 3 bear when the Chiku span closed below the cloud on September 2023. Right, that was okay. Now we're really bearish. Good on the weekly chart. Uh, but let's say we purchased here, right? Why would we purchase here? Because this is a shallow pullback signal here, shallow pullback signal. Uh, and this here is a deeper pullback signal. These two, when it's both a shallow and deeper pull, DPS signal. Right? It bounces to the weekly Bollinger Band. Is it here? Weekly Bollinger. So it's like a deeper pullback. So at the same time, it's a Kijun bounce. Not really a Kijun bounce, but it's a shallow, a deeper pullback, shallow pullback entry signal. So these two would actually be entries. These levels. So if we entered here in our strategy, right, our stop loss would most likely go here. Right? Our weekly stop loss would go here because we entered there. We would just be holding it, right? And it did reach 1%. That actually was a good target, 1% target from the weekly. Um, but if we were to hold it, after this, it fell below the Tenkin, right? Maybe we would think about holding it for a longer term than just a few weeks. This was just from January to May. We were thinking, wow, went up 1% already by May. Could we hold it longer? Is this just a pullback? This fall in June and by the end of June is this just a pullback? Should we sell or because closing below the Tenkin is a warning already, but it's just a pullback. How would we know? Then it closed below the Kijun. Okay, should we get out? Should we hold? And then we know that we definitely should be out by the time we get a strategy to signal here. This is a strategy to signal the sell on the weekly chart. We definitely should be out by that point. And we really should be out by the time that we get a stage 3 point. But then we would have given all that profit away. Is there a better way to exit? Or is there early warning that we should exit? Yeah, well, the early warning is that closing below the Tenkin is just a warning sign, right? That maybe we could take profit and wait for another signal to go up. Did we get any warning from our indicators? No warning from indicators. So this is a great example but we did get an extreme here. Actually, we should take profit here, but um, besides that, the only is there besides a warning to take profit. Is there any other way to tell that we should just take profit and not enter? Well, closing below the Tenkan is the one reason. Or maybe we should take a profit and then waiting to enter back when it closes back above it. That will be a shallow pullback signal. Um, and we can. If we go to a daily chart, I'm looking at technical for now. I'll go to fundamentals later. So that trade on the weekly chart, right, was actually a double bottom like pattern. We have a wave down, and then we had a breakup. This would be a stage. Let's move this over so we see clearly. This is a stage 3 entry from the daily chart. So our stop loss in this case, if we're looking on a daily chart, wouldn't be down here where the weekly chart hold us to. Our stop loss will be actually closer. It'll be right here, below that, below the daily, right? The daily uh, signal, or above, below this cloud, below the cloud here, and that cloud should be where support is. So below this support here, because what I would anticipate when this happened, right? What I would anticipate would be a pullback, and let me move this out the way so I can see better. The question is, when we get that pullback, how far how far would it go, right? So usually when we get a pullback, we're going to get a move to at least 382 or even 618. So we want to put our stop loss below that level, at least to under 76%, right? Right, and that's where we are right here, 76%, just under there, and that's where support is as well. So we want to put I'll put my stop loss here into the market at stage 3 in a daily chart, and try to um, go for a 1% target. You know, this is better here. Right, so it does go. It does. So we're making a ABC completed move. So we have our A here. We have our B, and it didn't reach 38%. It was a shallow pullback, so we're gonna go for sorry, yeah, shallow. It's not a shallow pullback entry, but it's a shallow pullback. Close to 38%, between 23 and 38%. So we should have a massive rally to 618 or here. So we do get a equal legs rally here. It does reach that level and giving us a 2 to 1 reward risk ratio with this. Um, if you can be even safer, put your stop loss under the low, it'll be 1.6. Is that stage 3? That's why if it's stage 3, not stage 1 crown pattern, I'm willing to, move my stop loss closer. 2 to 1 will be good, but make it closer. Because if we did get a pullback, let's say we got a pullback to here, so that's our target would be somewhere here. Yeah, 2. It will be a 2. Or still will be 1.5 to 2. You know, so that's looking at these things technically, and then after let's say we just want to hold. If we didn't get out here at the profit target, when should we get out? Here we have a strategy 2 exit right here. We definitely should be getting out at strategy 2 exit. Price just simply within 2 bars gave us the strategy 2 signal, and we definitely should just get out right here. Not only the fact that we closed below the key June, and then we have the TK cross. We have a strategy 2 exit signal right here. So our exit, we still would have collected 1% if our stop loss is here. Even if our stop loss is here, we would have roughly collected 1%. Because sometimes you won't always get out at the very top, or be reluctant to. And look, here again, we don't really even see divergence on MACD giving us a warning that, okay, and we do see on the histogram, but it's not really as strong as the MACD lines. We don't really get a divergence in the RSI as well. We do get an extreme here, and our other indicators telling us, hey, hold, right? And then if we're looking at MACD alone, we're going to think, okay, this is hidden bullish divergence right here, right? So indicators don't really give us a warning until the June 9th, around that time, June 9th, June 14th. And then um, if we get out here, you will be thinking, okay, maybe we can look for an entry. And the entry for me will be breaking this resistance here, breaking this resistance and the key June right here. This is the key June. So this will be like a mini rally, mini crown like thing. But you can see the problem, not only that we have hidden bullish divergence, the problem is the MACD is above, so below the waterline. So this is not really a signal for me. The signal for me, then in this case, we did have an extreme here. This would be considered an extreme divergence, yeah. But the problem is that this is not a signal after the extremes. We don't break above the Kijun. We just actually get rejected of the Kijun, and it fluctuates inside this cloud, and then gives us a strategy two signal again. So this was just the first signal to sell, and then definitely, hey, you should really not even consider this stock by the end of June, because it gave us a signal. So this is a weakness here to sell. It's not a buy signal. We should not get rejected by the Kijun. This here is basically a crown pattern, right? We have our crown pattern here, right? Just things to look out for. We have our uh, here. We have this here, and then we have our right shoulder. It didn't close above the Tenkin. If we look at a weekly chart, that area, we can see that this this move wasn't confirmed by the um, Chiku span closing below the prices or the MACD. So I wouldn't be taking a position to short the stock. It's maybe just exit, just completely exit the stock, but not taking a position short until we get to right about here. This area right here is an area probably where we get the uh, Chiku span closing below the prices. Um, I haven't gone to the fundamentals yet, but I'll get there. So yeah, somewhere right around here. Still doesn't close. Okay, so yeah, we just wouldn't be, we just didn't have the opportunity to short the stock at all, because my indicators don't tell me that I should short the stock. So I would just avoid I would miss the whole short move down if I'm shorting. You know, it will probably be somewhere, shorting it probably will somewhere right here then, right? If I'm going to short it, uh, somewhere there. Let's check it here. Yeah, somewhere there, right around here. And we get a state where we do get a signal, a strategy to signal to short it around here too. And a stop loss would go here, and we would just hold it. We probably would have taken a 1-to-1 profit already on here. Okay, going back to, I kind of got out of hand there. Going back to where I was before. When do you exit a good stock here? And we're looking at this area here. First we get a strategy to exit here and here. Um, and the key June break here, and then we have a break of support here. Pull back, failed high, and then break down. Is there a fundamental reason? A warning? Yes, there is. If we look at the earnings, this is February. This is basically the whole year of 2023 and of December 2022. until June 2023. Let's look at our fundamentals here. If we look down um, at Hershey around December here, we can see December 2022, we see 20 and 40, 14, and actually looks good. Then March 2023, we see that the earnings dropped, sales dropped. Okay, one quarter, not bad, right? But then it dropped again in June. Right, June, um, earnings dropped and sales dropped dramatically dropped. Right, um, you know, we had a pop in September, but then a drop in December. So looking at these, you can get 2 quarters here. We have sales dropping in for 3 quarters: December 2022, March 2023, and June 2023. That's a bad sign too. And then earnings drop. That's terrible. So sales are accelerating downward for 3 quarters straight. That 3 quarters. That's good enough for me to reconsider the company, the future of the company. That's too much. Too much negativity. No, too much mathematical negativity. Right. That's good. So let's look at the chart. So in January, sorry, December 2023, we had earnings come out, and they were good. That gave us that pop up. Okay, earnings are good, not bad. So we're investing into the stock, right? Earnings comes out again, sales drop. We get that pop up again, sales drop, right? We hit our targets, sales drop. As you can see here at next time, right? Okay, so that's a warning. Maybe take a profit, maybe hold. But if you just want to hold and don't really take profit, you're going to get a warning. Warning that by June 2023. June 2023 comes, right? A we get in June we get a warning, right? We get a warning here in June that okay, uh, this was the strategy to exit. So we would exit here, strategy to exit, because our fundamentals tell us, hey, probably should get out. So we already had 2 quarters of decelerating sales, and then 1 quarter of bad earnings. Well, it's not bad earnings, but dropping in earnings, right? So maybe investors are going to think maybe we're going to have yeah, this is 2 quarters already. With a third quarter, a third quarter of sales drop. You know, and so that's just what you see here in the chart. You can see here that by May, after our targets were hit, uh, break below the key June is telling us that investor sentiment is changing. June, investors are really thinking that going forward, sales has dropped for 2 quarters. They're going forward. They're probably thinking that sales won't, for some reason. And if you know the intricacies of Hershey, investors are thinking that are not so positive about sales uh, going forward, going to increase for some reason. And if we do a deeper investigation into the history of this time, we probably will figure out that maybe investors aren't so positive on this company going forward from around June here. And we can see it here in this bearish head and shoulders pattern as well. And then rejection when it tried to rally. And we will be out, definitely will be out the stock. So this is how we can get out the stock by a state strategy to exit, right? Strategy to entry is actually we're going to use strategy two based upon my test with strategy two. Uh, Sorry, it's actually strategy three exit. A strategy a strategy three exit, not a strategy two exit. But a stage three exit is when you have the key June below the cloud. Strategy two is when we have all things lined. Sorry, strategy three entry exit is when we have these colors, price go the colors and all the cloud and everything lines up, and the close below the cloud here is occurring, within 2 bars or 3 bars when the price closes below the cloud. All these things are lining up, and we get these color here. Here we have a solid strategy three, you know, bearish signal here because there's only one candle. It's between. It's within 3 candles, right? Within 2 or 3 candles. That's a definitely solid one. So yeah, we can combine the fundamentals with technicals to exit the trade. Yes, we won't get out early. We won't get out early, but we can make a profit. Definitely will make a profit. A lot of times I just avoid taking profit, and I say, okay, let's see what happens when we get the pullback. Pullback, trend line breaks, and then I'm exiting, right? Trend line, not only the trend line is breaking is when I'm exiting, but I'm looking at other strategies. My strategy three, stage two, strategy three, stage two, exit here. So that's how you can exit. How I'm exiting a stock. The last resort exit, or the avoidance of an entry. Because let's say I just say, hey man, this was nice. This was a nice ride from May to from from February to May. That's pretty good. That's a 2.4%, 2.4, reward risk ratio. That's pretty good. It's a gem. Exit, take profit, or at least take some profit, right? And then wait. And then should you exit, here's a warning that you should really exit, and then here's a big warning when you get the rejection here of the Kijun that you really shouldn't be in the stock here. It tries to rally, failed to rally, and or MACD, everything is negative. And then by June, you can see by June, MACD is just negative. So that's basically how I would exit the stock based on strategy, Ichimoku strategy I created and I'm using, or my interpretation of Ichimoku strategy, uh, combining chart patterns with uh, with other Ichimoku elements and trend following elements. I even use the guppy wave here sometimes, not all the time, and other things like the so another indicator I created, and if prices fall below the 50 moving average, there's a bounce above it. That's a negative sign as well. That's what I used to use in the early days. It's helpful for determining that we are bearish. Uh, and here's a 200 moving average wave. Prices definitely should just be out by that time. That's really late. Um, so So these are just elements to my trading strategy. What I'm using to exit the market. I think an exit is really just as important as the entry. Managing the risk, taking profits along the way. This is Rocket Man over and out.